Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We discuss what's impacting mortgage rates on a daily basis, whether it might come from the economic calendar or headline news or geopolitical or the combination. But sometimes it even gets more confusing out there, and a little bit more cloudy when good news are now bad news and vice versa, and that market sentiment changes and you may not realize it. So we're kind of here to try to explain what's going on, what's going through the minds of investors, what's driving these rates, where they're going, and hopefully give you the information you're seeking. If you're out there looking to refinance or purchase, you might be kind of watching rates and kind of trying to find out a good time. Hopefully these videos will provide you that educate, help you make an educated decision for yourself. If you're in the industry, well, you might be just trying to follow along with what's going on in the markets here. Hopefully these will help you guys along. A little bit about myself is I am a loan officer. I do work with a national lender. We do loans in all 50 states. We've got some great loan programs. So if you guys, anything you get, we can help you guys out with, whether it's a purchase or refinance, we'd love to hear from you guys. Like I said, we do have a lot of great programs are available right now, and love to be able to discuss those further with you. But more importantly, we'd like to be a resource for you folks. So if you guys just got questions out there and want to pose a question, please feel free to reach out. We are here to try to help you guys get that information. So, without further ado, we'll start off with the economic calendar on the report today. Earlier this morning, we saw the Bank of England, like yesterday, we had the announcement from our Fed. The Fed or the Bank of England gave their announcement. They did raise their hike their rate by 0.25%. We'll touch base a little bit more about what our FMC did yesterday in just a second after we go over the economic calendar. Challenger layoffs. We don't really talk much about this, but one thing that what this is basically announced job layoffs, and as we can see here, it jumped up about 3 million jobs to be announced to be laid off here. Jobless claims increased. So last week's report went up slightly from 180,000 to 181,000. Forecast coming in that same range at 182, but it jumped up a little bit more by about 20,000 to 200,000. Now, continued claims did drop, which is good news. We're seeing people come off the unemployment line. Now we also got the Q1 labor costs and productivity. These are the first initial look we'll look at for the Q1. And the previous report, fourth quarter, was revised slightly higher from 0.9% to 1%. Now, forecast was supposed to show 9.9%, and it exceeded that to 11.6% for Q1. And then productivity, or Q4, was initially at 6.6, but it dropped to 6.3, revised lower. And forecast is showing for Q1 at a drop of 5.4% to a minus 7.5%. So really not good news right there. Labor costs, of course, that's inflation, and that went to double digits. That exceeded things. So not good news right there. So how is this impacting the mortgage rates? Now, obviously, you can see here we'll touch on what the FOMC said yesterday. The markets rejoiced. Both stock and bond market did really well yesterday after the announcement. Basically, what drove it was that Powell mentioned that the 75 basis point hike possibility is off the table. There won't be any 75 basis point hike. Now, he did indicate that 50 basis point will be on the table for next few meetings. So there's a very good chance that for next few meetings we'll have a 50 basis point hike, but 75 has been taken off the table. They like that, and both the stock and bond market did really well, rallied really well. Stocks, I think Dow was up over 900. Bond market, we closed up like over 60 basis points, so that was a really good day for us. However, today, well, not so good. Right off the bat, we just started selling. There's also a large supply of corporate bonds that came into the market, which is creating a lot of competition. So a lot of sell-off in mortgage-backed securities, and you're seeing some of that part coming into the corporate bonds. And we still have a big discrepancy between investors from what's being asked for prices wise and what's the bid offers and what's asking prices. And there's a pretty big gap in between the two. And what happens is that it creates a lot of illiquidity in the markets as a result. as a result of that. So basically, they're not agreeing to any certain price between the sellers and the buyers, essentially. And uh, that's where kind of what we're seeing. And right now, we see a pretty big sell-off. We're down 81 basis points. Stocks are way down. So we not only lost the gains we had, but now we're even further down the hole from where we left off yesterday so far today. And of course, some of this, like the labor costs, for Q1 did not help matters because that again, that's all inflationary data right there on that as well. So if you look at the treasuries, treasuries are up quite a bit too. We're well past 3%. We're approaching 3.10 if you want to round up a little bit. So we're just a hair under 3.1 right now. So again, rates are back to yesterday's level before the Fed, way down before that. I mean, yeah, before we lost all the gains we had. So we're down, back to the levels we were, and probably a little bit worse when we started the day off yesterday, as you can see here by the graph here. Now, last but not least, we'll touch on what's the average rate for conforming loan limit. The 30-year fix is now about 5.5, and of course these are always a day behind. And the 15 years at about 4.88. So these are basically what we saw yesterday after the close, and of course tomorrow will probably worsen because of today's pricing here on there. So, and of course these also have points built into it. So if you'd like to get a rate quote, please reach out. We're here to help you guys out. We could certainly accommodate that. So please, again, got any questions? We're here for you guys. If you guys like these videos, please help us out. We greatly appreciate you folks. If you guys could smash that like button and share, we'd like to be able to get out there and help more people and get out there as much as possible. You guys have a great rest of your day. Thanks so much for watching. We'll catch you in tomorrow's video. Bye-bye.